To me, I don't think so. I don't think the shares just automatically go to the moon just because of the split. They might be assisted a little bit with increased liquidity, but what what all of you have to understand is that right now and for the last year, GameStop has had millions of shareholders who hold the stock. Some flip the shares, they buy them, they sell them, they come, they go, that kind of thing. But the GameStop holdings, all the shares of GameStop that are out there now are held by a wide variety of investors. And the critics that we are constantly quoting here, the folks who don't like this company, they don't like this stock, and that is a lot of the traditional media out there. These guys have mocked shareholders of GameStop without realizing the fact that they are mocking most of their actual readers and watchers of their programs. CNBC has been a total enemy of this company. Barron's, Wall Street Journal. I mean, it just goes on and on and on. There, a lot of the mainstream media has just poo-pooed GameStop every chance they get. They call it a meme stock, which automatically means it's garbage, and they lump this company in with gazillions of other companies, and they just call them all crap. At the end of the day, though, GameStop management did the ultimate smart move over a year ago. They raised close to $2 billion in fresh cash and are sitting on a mountain of money with no debts, and they're reorganizing their affairs in the middle of a pandemic. I think they're doing a great job in the middle of a world calamity. But you're never going to hear that from any traditional media, because at the end of the day, traditional media in New York and other financial areas, headquarters, these guys rely on a lot of advertising from Wall Street major banks, the big brokerage firms, and they rely on a lot of copy and a lot of interviews with people, and they get this information for nothing. The Wall Street community supplies research, supplies interviews, and they don't charge anything for it. So a lot of media live off of Wall Street's biggest bankers, brokerage firms, and then they disseminate that news and spread it out into the wide world. And whenever a company is going public through an IPO, you can count on a certain number of media outlets out there to hype the story of the new IPO that's coming up with all kinds of coverage about what the company does and what the potential of the company can be. And when the stock opens up for trading the very first day, you'll notice, as I do, that the IPO price might have been $35, but you never got any. I never got any. We'll never get any because we're not friends of these brokerage firms. They open for trading at double the price at 70, and then they start trading upwards of 100 a share. And the media that covers this story on behalf of you and I, they just talk about how glorious this is, how absolutely fantastic this is. This is another indication of a successful IPO that has now been graced upon us, and everything is great. Well, guess who made all the money? Wall Street, the Wall Street brokerage firms who did the underwriting at $35 a share. They sold all those shares to their favorite clients. Who are their favorite clients? Oh, the big mutual funds, pension funds, ETFs, and a bunch of other institutional investors, and then a small number of retail investors who are their favorite clients. They all got the stock at 35. It started trading at 70. Well, who's selling at 70? The only people who can sell at 70 are the ones who bought at 35. Guess what's going on? These folks are already selling a third to half of their shares into the marketplace, and then they run it all the way up to 100 with all the promotion from the traditional media. Away it goes. Coming back to GameStop, no traditional media loves this stock. And why? Because no traditional brokerage firm loves this stock. Why doesn't Wall Street love GameStop? Simple. GameStop doesn't make Wall Street any money. GameStop doesn't need to raise $5 billion every 3 months to stay alive. GameStop doesn't have $500 billion in debts that they need to service all the time and pay all kinds of interest payments on. GameStop doesn't need Wall Street for corporate alliances and takeover strategies. GameStop is its own machine. It's its own company based in Texas, And Ryan Cohen and his gang, which really are, I think, his main guys are out of Boston. They're not even out of New York. They know what they want to do with this company, and they're going ahead and doing it. So they're not making Wall Street any money. So why should Wall Street give a crap about GameStop? And that's the same that can be said for thousands of other stocks that are out there and trading that have no Wall Street backing or interest of any kind. If you take a good look at the top 100 stocks on Nasdaq or of the S&P 500, virtually all of these outfits, good chunk of them do a lot of business with Wall Street bankers and brokers, and they're covered by Wall Street analysts. Why? Because Wall Street investors and clients own the shares of these companies because they've been told to buy the shares of these companies because these companies make a lot of money with these guys and they want to back up their stock with support and exposure. And so their analysts do buy and sell recommendations and constant updates on how they're doing. GameStop doesn't make a broker in Wall Street any money whatsoever. And so Wall Street couldn't care less. And so the only kind of press you're going to get for GameStop, whether they do anything good, is just going to be, well, it's a meme stock. And, the retail investors out there, they just have a love for these kinds of stocks. What can we say? That's all you're going to get. You're not going to get support. So today's 4-for-1 split is not going to be hyped to you, to anybody else, by anyone off of Wall Street. Zero. They're not even going to talk about it. If they do talk about it, they're going to do what Barron's did today. Barron's did a headline today where they mentioned the 4-for-1 split, and the headline read, let me read it to you. Where is this headline? Here it comes. No, sorry, all of a sudden I can't find it. Here it is. Oh, yeah, here it is. Barron's, GameStop plans 4-for-1 split, quote, makes it more affordable for unsuspecting rubes, unquote. There's your quote from deep in Wall Street, deep downtown Wall Street. There's your headline. It makes it more affordable for unsuspecting rubes, which means you're an idiot if you buy this stock. You're an idiot if you follow this company. You're a moron. You're dumb money. And that's your friends at Barron's, who at the same time they do this, these are the guys, and all of their friends and all the other publications were exactly the same. When Coinbase went public 2 years ago, year and a half ago, Coinbase was underwritten by Wall Street, and it was the second coming of crypto exchange trading, blah, 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 blah. Coinbase started off a few years ago with, I think, their high price. Let me just double check this. I always forget. They were trading in the $340 range. They may have started at, they started at the 340 range. I think they were under it. I can't remember exactly the price, but it was 100 something. And this thing was hyped to the millionth degree by all the publications in Wall Street, all the analysts. CNBC had live coverage on the floor on covering the NASDAQ opening. It was just a circus. This is just one of dozens upon dozens upon dozens of IPOs that Wall Street covered to no end. By the way, Coinbase right now, $51. How much do you want? They are losing money